Right. Good morning, everybody.
Right. Good.
Got something on mute. Okay, no, now I don't hear myself. All right. So good morning, everybody. My name is Jeff Wood with Traders Reserve. This is Breakfast Club on July 30th. Oh my gosh, it's already the end of July. If you could really quick, I am flying. Well, I'm not really flying solo. Kara is hiding in the background, a little bit under the weather though today. So if you could just let me know that you can see and hear my screen. That would be great. All right. Thank you so much, CJ. All right. Let's get started. I don't have John's fancy Breakfast Club slide, but so I'm just going to hit you with a bunch of words on a slide. Let's start with the midweek update. What an exciting week it has been. As far as the S&P 500 and NASDAQ futures, we'll check it again live in just a second. But for the most part, the overnight session has been positive, which is nice after seeing yesterday's down day. We're back into being positive. At least the futures are. We'll see what happens as soon as the market opens. Um, so major indices obviously closed lower yesterday. UPS, UNH, BRO all had some pretty nasty declines. Actually, what was interesting is Novoro NVO that also had a pretty nasty decline. They're the ones that make Wegovy and some of those other weight loss drugs. Well, I mean, they're now used for weight loss. But anyway, they were talking about a lot of knockoff products and stiffer competition and everything else. So that was another one that I believe Dave had traded quite a bit in Income Masters, maybe many months ago. But that one took a little bit of a hit yesterday as well. But a lot of that based around earnings or forward guidance or things like that. Um, as far as what's going on today, we have the Fed speaking later today, largely expected to keep rates unchanged in the 4.25 to 4.5 range. But really, I think what is going to be where all that volatility is being held is the press conference right afterwards, because that's when we get to hear what Powell will say about September rate cuts. And I think certainly the pressure, whether it be from the president or even within the Fed board, uh, I think the pressure is certainly mounting for seeing a rate cut within, well, soon. I mean, the Fed's even said they wanted two rate cuts by the end of the year, and they're certainly running out of time if September is the next time to do this. So we'll see what they say. But if you're trading those zero DTE trades that everybody loves now, certainly watch out for the 2 o'clock or use the 2 o'clock volatility to your advantage if you have a strategy that uses high volatility. Just watch out for that. Anyway, we have earnings season. Of course, Microsoft and Meta, two of the big Mag 7 stocks, are reporting today. I'm going to actually look at some Microsoft trade ideas in a little bit, or at least show you, for those who love and just have to trade over earnings, I'll show you a couple of different ways that you can trade Microsoft today. And S&P 500 companies overall still expected to show growth over Q2 earnings, or I'm sorry, Q2 earnings over last year, largely in part because forward guidance was so much lower for Q2. But Q2 from over last year is still good because last year we didn't have all the tariff nonsense and whatever. So companies are still showing growth, which is good. And that kind of gets to the next couple of points as far as economic data goes. GDP is expected to show growth. Yes, the ADP unemployment, or I'm sorry, the employment, let me back up. ADP employment report forecast for today is positive. We talked about that on Monday. The job openings yesterday, that was kind of the big buzz, is that there was only 7.44 million. There was an expected 7.51. The 7.51 was even lower than it was the previous time. So that's where a lot of the news stories came out and said, oh, the economy is getting weaker and all the rest. Yes, it's a little bit lower than what the expected amount was, but overall, consumer confidence rose. We do have unemployment change today, and if that comes out positive, then again, it's just sort of a mixed bag of economic signals. So there's little here to really change the macro narrative. What I would be looking for, we've already seen leaders in Europe say, hey, that was a really bad deal. We don't like it. We want to renegotiate. We've already seen the White House come out and say, hey, yes, we've inked deals, but we can change these deals and do whatever we want whenever we want. So I would be more concerned about that sort of narrative than some of these job opening and closings and whatever. Doesn't mean that we can't or shouldn't keep looking into this for trends, but certainly yesterday's report of job openings falling a little bit more than expected. That's just a single data point, and I'm not too worried about that. There's so many other things to worry about in life. Anyway, economic calendar. So again, this is what we talked about. ADP showing the non-farm employment change showing positive, GDP quarter over quarter showing positive. Again, this all comes out and actually 8:30, so we should have already seen the GDP number come out and the non-farm payroll employment change come out. I was too busy prepping for this, so I haven't seen the actual numbers yet. And again, Fed coming out later today. PCE index coming out tomorrow, pre-market. That's really the only thing, or the only economic reports should all be coming out by 8:30. So we should know that going into the trading day. And then Friday, we do have more non-farm employment change numbers coming out. And the unemployment rates showing that the estimate is to tick slightly higher from 4.1% to 4.2%. So we'll see how that goes. I think the Friday jobs report is likely to have more of an impact than anything else that we will see today or even yesterday as far as jobs go. So that is the news of the day. Let's look at trends of the market using Heikin Ashi candlesticks. The reason that we use Heikin Ashi, or at least the reason I use Heikin Ashi, is it's easier to spot trends. It removes a lot of the noise, so it's easier to spot pivot points, I think, and spot ongoing trends. So I know there's a lot of lines on the chart. I didn't want to get rid of the lines because we will talk about those in Monday sessions and everything else, and those kind of project where we think the S&P will go. But overall, you can see that the S&P 500 has had mostly green bars since the end of June, about June 23rd. We've certainly been in a strong trend. Yes, we had some sideways movement there in early July, but moving on, and still making new highs. The only thing that I'll say about yesterday's bar, so yesterday's still a green bar, so looking at the overall trend, yes, it was a down day, and everyone's says, we've had a lot of people say, I don't like trading when the market's at all-time highs. That's fair, but when it was at all-time highs before and it kept moving up. So until the trend changes or until we get some other story, then we have to kind of go with what the market's giving us. And right now, that's still a green Heikin Ashi bar. The only thing on this one that I wanted to point to, and I'll put my little red dot there, is we do have a lower wick on a Heikin Ashi candle. So, again, we had a lower wick here. The market moved sideways. We had a lower wick and a doji, really 2 bars in a row. It didn't mean that the market moved lower, but we just need to be a little bit cautious about where that is. Luckily, we had dojis that never really went anywhere. Again, we had we had a market shift that was duration over direction there. And then we took off higher. So we just need to be a little bit cautious with that lower wick on the SPX. If Microsoft or Meta or both come out with blowout earnings, then goodbye lower wick, and on we go. This is the Q. Again, no lower wick here. All-time highs yesterday. And just keep marching higher. There was one little red Heikin Ashi bar there, and that's why this My Heikin-Ashi trend indicator went yellow. That's just because there was a little indecision back there, but otherwise green, green, green. So we are good to go on the Qs. The rut has shown a little bit more indecision. You can actually see compared to SPX and uh, and the Qs, we've had red, green, yellow, a little bit more Christmas tree colors going in here, and really mostly yellow for the last couple of bars. That's just because it's green, it's red, it's green, it's red. We have wicks. We're very wicky all over the place. So rut is showing some indecision or maybe some exhaustion there. Again, it may take some of the other bigger names to help lift the market up higher for the rut. And the DIA, we talked about this bar. If I had zoomed out on the chart, you would have seen we've talked, not this bar, this line, talked about that line for on Monday. That's really been the line where we haven't been able to break above that line. So that is still acting as resistance. And what is a little bit cautious on the DIA is that flipped to a red Heikin-Ashi candle. So yeah, so we had some green going, but now flip to a red. Again, we're still above this green cloud trend. We're still above the 20-day moving average, all that other stuff. We're just hitting that resistance line and flipping to a red candle. Just extra caution. We've also talked about on Monday, or really the past couple of sessions too, excuse me, that August brings in some negative seasonality. So after earnings, after the big tech earnings in July, we see some negative seasonality in August. So if we do see negative seasonality, or if we follow seasonality trends, then we would likely see these Heikin-Ashis go to red, and see some of this break down a little bit. So again, just a lot to watch out for. Now, that said, I always get in trouble because I always say like, oh, let's be cautious. And then like you'll see me maybe in a session do a bull put spread, or I'll talk about Microsoft doing a bull put spread. And everyone's like, oh, wait, I thought you said be cautious. There are stocks that are going to continue or even buck the trend or the overall market trend or anything else. I'm just trying to point out overall market trends and then figure out what sectors that we can get into and still be bullish. So there's still, that's all sector rotation stuff. There's still bullish trades to be made, even if the overall market is going down. It's just, sometimes a little bit more challenging. And if you have a bigger portfolio too, I'm trying to give the message out to everybody too. If you have a bigger portfolio or a stock portfolio that has nothing to do with Traders Reserve, then, then maybe you want to start looking at hedges or taking some profits off the table, whatever you want to do. I'm not a registered financial advisor, so just letting you know some of the things that I do when I see some of these things come up. All right, so let's, I want to look at a case study on Microsoft earnings. Just thought it would be kind of a fun way to throw together some trade ideas with everybody today. So if you want to trade Microsoft earnings, this is not an official trade, not going to be tracking any of this. Just wanted to kind of help build trade ideas with everybody today. So if you want to take a screenshot of this so you can reference it, that's fine. But the average one-day move after Microsoft earnings is plus or minus about 4.61%. Now, this is where sometimes average doesn't always work out well, because you can see there was, this is, I think, several, earnings, but you can see like this one essentially flat, this one essentially flat. Then you have this big outlier of 8%. You had the most recent one after AI news. You had this last quarter, very positive, near 8% move. So sometimes the average is a little tricky when you're looking at these things, and sometimes your broker or other websites, this one came from optionalpha.com, some of these will have these average moves, but you just got to be a little tricky or a little bit careful with average moves, because the outliers, the extremes will mess with the average. So statistically speaking, you just got to be careful about that. But anyway, the expected move for after the market today is 3.5%. We know that the average is about 4.6%. And then we know the best was 7.63. That was actually last quarter. The worst, negative 7.72 there. Now, I can't protect for the best and worst. If you protect for the best and worst, then likely you're just not going to get a lot of credit. But we can at least set up knowing this average of plus or minus 4.6%. We can at least start looking at some trade ideas. So we know that also, for the most part, despite what Microsoft does, and despite what Microsoft does a week after, 2 weeks after, 3 weeks after earnings, we know that the 1 day move after earnings is actually only 45% of the time is positive. So we really don't have a lot of indication based on the 1 day move of what Microsoft will do. So then it's just a matter of what is going to give us an acceptable risk, or what's going to give us an acceptable reward for that risk. So I'm going to go out to live screen and show you how I would look at these things. As soon as I can find my Zoom window. Why does it always hide on me? I swear. Or I just have too many windows open. That could also be. All right, there it is. I see it now. Right. Let's find the old Thinkorswim. Let's share Thinkorswim. What time are we at? All right, 8:47. Thank you to thank you everybody for being here, but those in different time slots, I know this is super early, so thanks for being here. All right, let me try to maximize the screen. Let's see, how are we doing? Futures still up slightly. Oops. Now that we know that, I can minimize that window, get rid of that, try to get as much real estate. I'm just looking at the live window to see how I can manipulate my window to get this a little bit larger for people to see. Oh, that might be the best. Let me go to setup really quick. Sorry, should have had this done before. Let me go to very large font. All right, hopefully that's a little bit better. Okay, so there's a couple things. Again, so I've marked out this 4.6%. So that is this vertical line in this vertical line, 4.6%. So if we just did an iron condor based on the 4.6%, so that is 490 up to 537. And I know it's a little bit small, so let me see if I can minimize some of the stuff. Okay, I know. So the 4.6%, now this is pre-market prices. We'll see what happens, but this is just a 5 wide iron condor. And you can see that, let's look down here at the lower left. You can see that the max profit on this trade would be about $179, but you're risking 321. Again, it's a 5 wide spread minus the 179 that you are collecting in right now. And so that means your max risk is $321. But you have a pretty wide, you have a lot of room here. And this is selling the August 1st expiration, so very short duration. And you have a lot of room. You have your plus or minus 4.6%. Now, this is one of those things where you're going to see volatility get crushed after earnings. So if you can't expect to collect a whole bunch, if Microsoft blows out earnings and has another 7% gain, there's not a lot that you can do. There's not a lot of, you can try rolling things and whatever else, but with a very short duration trade, this is pretty much, you have to be accepting of the risk. And so that's $321 for a potential $179 gain. Now, the other thing you can do is with 45% being, so I started with the iron condors because again, it's 45%. I mean, it's really just about a coin flip is whether or not Microsoft will beat earnings, or the market will respond favorably to Microsoft earnings. So that's why I started with the coin flip. Now, technically, the odds say 45% goes, only 45% of the time it goes up. So you could break that up and just do the call spread and leave off the put spread. The other thing that you can do is based on the expected move. Now, the expected move was 3.5% in either direction. So we can mark those lines. And so you can bring in your iron condor a little bit more. So let's do that, just showing you that as an example. So this is that expected move of 3.5%. Maybe this is a little bit too skewed on the left side. Maybe we could skew that a little bit more on the call side. But this one is now bringing in $3.35 in credit, and it's only risking 165. So the tighter that you make that iron condor, you're going to bring in a little bit more credit. And as long as we have one of those years where we don't really see that much of a move, this has an incredible risk to reward ratio because you're only risking 165 for the potential to make 335. So you just, you just have to bring in your iron condor legs a little bit more. As you can see, I was modeling out a whole bunch of different things. The other thing you can do is we know historically about 1 week, and certainly, actually, this is why I don't like this one, but historically about 1 week after earnings, Microsoft goes up. Now you can see all the news. We had Google come out and have really good earnings. The AI story is still positive, which is why Microsoft blew out earnings last time with the 7.8%. Microsoft is still spending on AI. And so the question is, will the market say, hey, that is good or bad? We don't know. This is using Heikin-Ashi candles on Microsoft. We're still in a very strong bullish trend. You can actually see this is what happened the last earnings. This is that 7.7% gap up. Even though Heikin-Ashi doesn't show the gap, it just shows a really tall green bar. But this was, if we flip this over to normal candlesticks, you can see that that was the gap up, and then it just has taken off. So if you're thinking, oh my gosh, Microsoft is the AI leader, they've got so much going for them, there's so much with their business in introducing AI to business, that we're going to have just another killer quarter, or at least killer earnings report, then we go back to our analyze. And you can do this. You just buy a at the money call. You can even you can just buy the at the money call. If you want to reduce your price a little bit, then create a debit spread. So this particular debit spread is costing you $110, and with the potential to make 140. So what I like about that, even though, yes, I did say that one day after the earnings, there's a 45% chance that Microsoft goes down. What I like about this particular one is it's a risk of 110 to make 140 on essentially a coin flip anyway, being Microsoft has 45% chance of moving higher the day after. Technically, this is, so this would expire in 2 days. So essentially a coin flip one way or another. The call side of this gets you 140 on 110 risk. The put side, which I believe I have this modeled out down here. The put side is $130 at risk and only making 120. So that is a less than 1-to-1 risk to reward ratio on the put side, better than 1-to-1 on the call side. So it just kind of depends on how you feel about Microsoft and what you want to do. This is, unless you're expecting another 8%, and I know we've done some of these in MTC, I wouldn't do the other way that you could do this is buying a call, buying a put, saying, I have no idea what Microsoft is going to do. I just want to, I just think it's going to move, and I don't think I would do this on Microsoft just because it doesn't have a lot of history of moving that 7%. And in fact, 7% positive and negative was, in the last 5 years or so was the biggest move. The issue with with something like this is with implied volatility already being as high as it is on both the call and the put side, you're buying high implied volatility on the call side, you're buying high implied volatility on the put side. So unless you are expecting, or unless you know something about Microsoft that is really going to go crazy, you really have to have one of those outlier moves, beyond that 3.5, beyond that 4% move. And remember too, this is showing that, if it has a 4% move, that's going to be positive. This is pre volatility getting sucked out of these options. So if you go to this volatility step, and you can see okay, let's say we lose 5% volatility, or what's a volatility crush? I don't know, 10%. Then this purple line is actually what we're talking about. So you can see in the lower left, if volatility right now is 25%, and it goes down to 15%, then even on one of these outlier moves, you're still not going to make as much as the chart says you would have. So you need to watch out for what volatility will do to your options, especially when you're doing these straddles, or when you're buying a straddle or a strangle, because then you really, really, really need that big move in one way or another. So anyway, it's been 30 minutes. I'm just here talking. I could talk all day about this stuff. But with all of those, not really knowing what Microsoft is going to do, I can't tell you what to do. I'm personally looking at the iron condor. Let's get rid of this volatility stuff. I'm personally looking more at the iron condor. We'll see what happens when market price opens. I'm not sure that we're going to get this 165 to 335. So either that iron condor or the first one that I showed you. I'm looking at one, or I'm probably more in that mindset for Microsoft, but just trying to see what options give us as soon as the market opens. So, all right, with that, sorry, man, that screen still looks small. I don't know. I changed the font. I don't know. I gotta work on that. Maybe Kara and I can work on that before next Monday. But anyway, I'm looking over. I don't see any. Oh, thanks. Thanks for the comment. I'm not always here to make the live sessions, but I review them every morning. Oh, that's awesome. Thank you so much. It means a lot. Sometimes, I am human. So sometimes I like the reassurance that what I'm doing is good for people. So, all right. With that, then, Kara, I'm not sure what to do to stop this thing, but if you have any questions or anything that you want me to talk about in future sessions, just leave a comment in the Breakfast Club chat and I'll get to them. Otherwise, have a great day trading. Stay sharp out there. Watch out for that 2 o'clock Fed meeting today.